Hey, welcome to Candlestick Cash Weekly Radar. We're looking at the last 1 month of normalized performance, and gold is up 15%. Obviously, that's been a great winner if you buy gold on the dips. XLP is in second at 3.5%. Most things are under 0%. They're in the negatives, as you can see. It's just gold, XLP, and utilities, XLU. So we're going to look at XLP today. A couple of stocks in XLP that I like. But other than that, it's just pretty much we don't see any trends that are really emerging in the market yet in Q2. So we're going to go ahead and just look at the indices. I'll look at the sectors for today, but let me just say, 2 weeks ago was our last video. Because we skipped last week, I said correctly, probably just stay out of the market with all this tariffs, volatility, and there's a lot of volatility. But let's take a look at the sectors today. This is 1 month. Let's actually go to today. Yeah, the Dow's down almost 4% in the last 1 month. So it was up today, 79 points. And the best sector was actually real estate and utilities. There's your XLP consumer staples. Like we were talking about, those were pretty good today. And here's the Dow. You are over the T line, 8 EMA. So that's a good short-term trend. But remember, all three of the indices we're not looking so great. There's no uptrend. Yeah, we have some nice bottoming formations, like the MACD is crossing over, and you'll see it's already crossed over maybe on some others, but you're still under the 50 blue line and the 20 green line. These are simple moving averages, but you're underneath those, so just keep that in mind. But you are above the 8. So what you want to watch for if you're trying to get bullish, you're trying to see when you can start putting some trades on and feel better about the long side, look for this 8 to cross the 20, this black line to cross the green. Okay, so that's what to keep an eye on, and you could just use this in the current trend that you don't have any trend, except for downtrend, we can say, because that's what it is. But if you want shorter term trades, maybe as long as price is above this 8 EMA T line, the black line, sure, you could put trades on, but we're in no uptrend in the market. So, yeah, the Dow right now, it closed over it, and it jumped up a little bit today and didn't have much of a trading range. So, you have the Darvis that goes all the way from 366 to this point at 408 almost, and could break it tomorrow. The Qs, very similar. I have Fibonacci retracements here. You can see how it held the 50% retracement. A couple of days ago on Thursday, it held that nicely with that long tail to the bottom side. And you're just under the 20. And of course, the 50 is actually, that is a dead cross under the 200, 50 under the 200. I won't make too much of that, but I'm just mentioning that it is happening, and it's been quite some time. If you back up, when's the last time the 50 was under the 200? It was way back here in February 2023. That's over a year ago. So, look, do we have more of a downtrend coming? I mean, maybe. Well, that's what we're in right now. So I would expect, if anything, more downtrend, more downside. The SPY, same thing, 20 under the 50, but price, and 8's under the 20, but price is above the 8. So look for that 8 to cross the 20. That is your first step towards an uptrend. All right, so I'm still bearish on the markets. We're still to the downside, but probably staying more neutral. It's kind of bearish neutral right now. Here's the XLP chart. It's actually had a couple good days in a row here, coming back to this level. The XLP, the 20 is under the 50, but look at that. See how the 8 is crossing the 20? That's the 8 exponential crossing the 20 simple. That's a good sign for the sector. Now, I don't actually want to trade the sector. I'm not saying it's bad, but I have a couple of stocks starting with Philip Morris. Okay, Philip Morris, the 8 is crossing the 20 right now. The 20 is above the 50, so it's a positive stack. I like this much better than its sector. So maybe buying that on a dip. One way you can play this is see the Darvis here. You can cut this in half and buy the bottom half of the Darvis. As you can see, if you'd have done that back here, it would be working very well for you. It's risen $12 from its bottom on this day, and it's best to buy in the bottom quarter, and you had a chance to do that then. So what would I do with it now? Yeah, just buy the bottom half, possibly. You could buy off the 8, however, whatever trade strategy you use, but I like Philip Morris. And then Kroger is another one I like. A little bit of a doji sandwich today. You came back after your nice move here. You support off the 50. You build up energy, have boom, a big move. And then you come back down, but you support off the 50 again. And the 50 is rising. So really good 50 support. Yeah, if you could ever buy off the 50, that would be perfect. Maybe buying off the 20. Look at the positive stack on Kroger. Once again, you have your Darvis you can play with. So I like those. I mean, we always talk about CVS. That has been good. That's been my call for a little bit. Now with all that tariff volatility, it got all the way down here. That was a great opportunity. Look at that. They actually closed that day above the 50. How resilient. But just kind of a scoop pattern there. So yeah, CVS still looks very good. But I picked that enough. So we'll just say PM and KR are my picks this week. So happy trading, and great to have you back on Candlestick Cash.